In this video, I am about to review a trading strategy that will make it impossible for you to lose. So first off, go on to Tradingview. Then you click on Charts. Now go to the indicator section over here and search for Lemma Zero Lag EMA Wick Kalman filter. This is the indicator here by Morty. Click on it once and let us do some adjustments. So to make this indicator very accurate, and we are going to click on the indicator, right click, then click on settings. So you are going to adjust the settings according to how you see it in this video, as this will be the perfect parameters to give you optimal results. So with that said, let's go ahead and make some adjustments. So move over to input, then we look at period. We change the period from 8 to 5. Then the period medium, we change it from 21 to 90. Okay. Then the period slow, we change it to 200. If you have that written, then let's move over to style. Click on Zero Lag to uncheck. Then we click on OK. With those changes in place, your charts should look like this. So this indicator is going to print out the buys and the sell signal. As you can see on my screen here, you can see that everywhere we have the green, there's a buy that took place. Everywhere we have the red sell signal, there's a sell that took place. Here we have a buy signal, and we have a good buy to the upside. So this indicator is literally going to do the work for you. However, this indicator does not work well on its own. We are going to add some more indicators to increase our chances of winning every single trade that we take. Sell, a buy. So this can go on and on and on. And remember, this is on the 15 minutes, and you can do it on the 5 minute, on the 1 minute, and even on the 30 minutes. So this is another sell trade here. So this indicator works like magic. I'm going to show you guys how to have the best possible result and how to filter out bad trades. As market conditions change, we have to be able to adapt to. So having the market condition change on you, like in ranging markets, we are going to have some really messed up trades. So we are going to go ahead and add our second indicator, which is going to serve as a filter. So go ahead and search finger volume oscillator. So over to the indicator section, search finger volume oscillator. So is this one that I ever get? Click on it once and hold on. So after that, we are going to make some changes. Of course, it's not going to look like this. So after we make the changes, we are going to be able to have way better entries and way better results. Let's go ahead and make some changes on this indicator. Right click and go to settings. Go to input and you put in for the length, you have 90. For the slow length, you have 200. I hope you're catching up. Signal, turn it off. Turn off the show histogram, make sure it's turned off. Highlight KO, KVO signal crossovers, turn it off as well. And you also turn off the highlight zero line crossover. Now go over to style, turn this off. Then you change the KVO to columns like this. Then you can make this green dimmer. So I would rather prefer the green dimmer, and the red, I'll give it a dimmer red. I like it like that. then you can go ahead and click on OK. So our indicator is ready to be used. Now, the big question arises, how do we use this indicator to filter out bad trades? This is how this indicator works. Once you have this indicator over here turns red, you make sure that when the sell signal appears, this indicator should be in red. So if you have a sell signal from this lemma, you should make sure that it matches with the care view. If they do not correspond or if they do not agree, then you do not have a trade. As you can see in this example, we have a sell trade here after this kind of form and a sell signal appeared. We confirmed it by looking over here and it's red on the K view. So once this indicator is red, aligning with this one, they are agreeing on terms, then we can have a good trade here to the downside. So my ideal take profit is usually 1:5. That is how I trade. 1:5 is a perfect risk to reward when you're scalping the market. Now let's look at a buy example. For a buy example, you can see here a green signal appeared telling us to buy. Now we have to check to make sure that this is actually valid, because it could our KOV here could be green, could be red, and that is not a good sign to buy when the KVO is red. So we want to make sure that the KVO agrees with this decision. So if they both agree, then we can take a buy. So let's assume that we took a buy immediately this kind of form and close, right? We have a stop loss there and we're aiming for 1:1.5. Like that, we have a good trade. Here's another example. We have our lemma giving us a sell signal. Then over here in the KVO, we have a sell confirmation, right? So this KVO confirmed that it's okay to sell, because why? Here is red, it's measuring the market volume and how the market moves, measures all the average prices and gives you in the form of bars. So if you take this information, align together with this one, you see that they have an agreement, and with that we can take a successful sell trade after the candle closes. Like stop loss, we just keep it above the highs like there. Then we make sure that we're taking 1:1.5. Okay, now it keeps going on and on and on. Here we have a buy trade, but we don't really have a green signal yet. So in this case, you have to wait. So you would have missed out on this trade because the green came when the signal was already popping. However, let's look at an instance where we have a green, we have a red, and it matches with the KVO. So every time that they agree, you have 100% win rate. And that is why I said this strategy over here is going to change your life. We have a 1.5 and you just keep winning over and over. Now let me show you instances where this indicator without this one could give you bad trading signal. Okay, so let's assume that this indicator did not exist, and I'll show you some examples where you could have actually taken some really bad trades. Here's an example of a bad signal. Here we have a buy signal appearing, but if we look closer down on our KVO indicator, it's all red, and when it's red we do not have a trade, right? They do not agree, so we cannot trade here. Assuming that we do not have this indicator set, we could have taken a trade here, and what would have happened? We would have ended up losing. So this indicator is going to reduce your losing trade and increase your winning trades, therefore putting you on a very okay. So let's look at another example where a bad trade could have been taken. This is an example of a sell trade signal that our lemma indicator gave us. So here the indicator said we should sell, but however the KVO disagreed and said, no, I am looking at the market volume and it does not look bearish to me. So they do not have an agreement, and when there is a conflict in decision, you should stay on your arms and do nothing. Okay, so now instead, after a while of waiting, we have a buy signal finally appearing, and we have volume increasing in green, meaning they have good terms and they agree. And now we can take a successful buy trade to the upside. Entering there, keeping our stop loss nice and tight, where we have like a recent swing. We can keep it under these lows here, or we can keep it under here. And we make sure we're aiming for 1:1. And that is how you can keep taking winning trades back to back. We have a strategy that looks like it works pretty well. However, it is still not the best yet until we do this final indicator. Now, this indicator that we're about to increase, or we're about to add to this chart, is going to help us with the directional bias, and to help us with the trend, and it's also going to help us with our profit and target. Sorry, our stop losses and target, right? So it's going to help us with the direction, stop loss, and target. Now you go onto the indicator here, and you type the black flag indicator. So this is the indicator here by yes, whatever that is. So you click on it once and it's going to appear in your chart. Now we have the indicator running, but it looks pretty messy. So we have to go on and do some changes. So first off, we go to the input, 80-hour period, change it to 45. And the 80-hour, leave it at 5. 8-hour factor, leave it at 5. You can go over to style and you turn off all of this. And all of this off, as you do not need it. Now you click on OK. So now the position of the price will be read by this indicator here. So now what do I mean by that? When we have the price above this indicator, it signals a buy. And when we have a price below this indicator, it signals a sell, right? So now that we have this market, let's look at some indicators. Let's look at some examples that could help us out with some really good signals. So first off, let's look at this one. This is an example of a bad trade, of course. We spoke about this one. This is a sell, and it's on top of this indicator, which signals a buy. Instead, we have a sell signal here, which is invalid. So what are the steps? Steps 1. The first step here is to make sure that you have a signal, right? A trade signal could be a buy or a sell. So in this case, it's a sell. The second step is to check, is the price trending on top of the moving average or below it? Remember, when price is trending on top, we look for buys. When it's trending below it, we look for sells. So in this case, price on top of it, invalidating this sell. And we look down here on this KVO, we see that it's green, also invalidating this setup, meaning buying will be your best option here. Instead, we sit on our arm and we wait for a signal, which it appears here, took a buy, and you can see how that works out. Now, let's look at the scenario here. We have a sell trade. Let's take this one for example, right? Now, we have a sell trade appearing up here. You see a sell trade appearing here, and now when this sell trade appeared, the indicator here was green, and down here was green as well. This is not a good sign that you should buy, that you should sell just now. You have to wait till price is trending below the indicator before you take any trade. Okay, now let's see how profitable this strategy is going to become once we start using it correctly. Now, first off, we have the price trending above our indicator here, meaning price is in a bullish momentum. We have a buy signal up here, and down here our indicator says green. So all of these three indicators are on the same side of the market. So if we take a buy, you can see how good that is. And make sure you aim for 1:2. So how do we enter and where do we put our stop loss? First off, when this indicator comes out and forms, the candle that forms will close, then the indicator will appear. Keep your stop loss at the bottom of this indicator and take your profit at 1:1. So that's my trade, and that is how your trade should look like. Okay, same thing here. When the market comes, you have everything here aligned, price is on top of this indicator, and here we have a green, so we can enter a buy, stop loss below the moving average, and target 1.1. So here, the trade is still running, and we have to wait for it to hit our target. Here is a bad selling signal. Here is a bad signal because we have green, and we have red, so it does not correspond. It has to be red, 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 or green, green, green. That's all. Okay, so thank you for watching this video. If you want to see more content like this, kindly subscribe and hit the like button.